Welcome back to the Money and Wealth Show. I'm Sterling Fox. Our special guest this week is Dr. Marc Faber, known to millions of American television viewers as Dr. Doom.
Thank you, thank you.
Marc is a European who lives in Asia and therefore brings a unique global perspective to economic analysis. You predicted several months ago that there was going to be a serious, significant slowdown in China. That's important to people, especially in British Columbia, Canada, our gateway to the Chinese marketplace. Has it panned out the way you predicted it would?
Well, we have a slowdown that is quite significant, say car sales, which were up at an annual rate of 60 to 100%, say 6 months ago. Now the growth has slowed down to an annual growth rate of around 30%, but I mean it's still there, and it's not yet a contraction. Now, the problems are probably getting worse because we have a lot of underground lending in China, a lot of Ponzi schemes where state and local governments get money and then they place it with some loan sharks, and these loan sharks lend it to real estate developers. I mean, it's all very murky, but there's a lot of fraud. And there is a bubble, not so much in terms of pricing of real estate as in terms of supply. And the economy, in my opinion, will continue to slow down in the second half of this year. And the government will probably re-stimulate at some point, but I'm not sure it will help the real estate market. And as I said, we have a credit bubble in China, and when it bursts, obviously, you will have some negative consequences, definitely.
And what sort of repercussions might there be for resource-based economies like Canada or Australia?
Well, I mean, we had a very rapidly growing Chinese economy for the last 30 years. And if there is a setback in the economy that is more meaningful, let's say a crisis, then obviously the demand for raw material will go down very substantially. Even if it's just for 1 or 2 years' time, it will be a hiccup. But I think that if you look at economic history of the US or of Japan, we had many recessions in the course of time, and then they bottom out, and then there is a recovery. The big issue in Asia are more of political nature. The tensions in the world are rising between the United States and China, because obviously it should be clear to anyone that China is, of course, the largest trading partner of North Korea and the great supporter of the North Koreans, and that this doesn't please the other Asian nations very much, nor the US. So I think we are going into a more difficult environment where other issues than just US fiscal and monetary policies will determine the movements of asset markets.
In terms of those markets like Canada that are major suppliers to an economy like China, with this slowdown already underway, is the idea at our end to become more aggressive, to push for greater market share, or just ride with the tide as it's going now?
Well, I guess that the Chinese, they have their purchases from Canada of raw materials.
Yes.
And they purchase essentially where they get the best conditions. And they also use, obviously, raw materials as a geopolitical tool. Say, they go to Africa and then they develop the infrastructure in a country, and for that, they get the access to concessions and to the raw materials, which then they export to China. So with that, they gain a geopolitical influence on, say, African countries, or on a country like Brazil or Australia, where the exports today to China are larger than to the United States.
I don't mean this to sound flippant, Marc, but China is the largest holder of United States debt. What would happen if some political occasion in China caused them to call the U.S. loan, so to speak?
Well, at the present time, they could reduce their holdings of treasuries, and I don't think it would have a meaningful impact on the pricing of treasuries, because there's a lot of private money flowing into the treasury market, because the savings rate has gone up. And Mr. Bernanke could essentially monetize the entire debt that the Chinese would want to sell. So I think at the moment it would not have a huge impact, but obviously it's something that the Chinese will not do, is to continue to accumulate at the same rate they did in the past US treasuries. That won't happen. But whether they will sell it right away or may reduce the position, question of course also for them is, where do you invest? I think eventually the Chinese will build up their gold reserves. And of course strategic reserves like copper or oil, because that is in a period of conflict would be very difficult to procure for China.
And there are more and more North American and foreign companies, period, doing business in China, joint venturing on gold, among other metal activities.
Yes, sure. Yes, definitely.
But you were talking earlier about the sort of behind-the-scenes manipulations of the Chinese government. When any foreign company goes into activity in China, it's essentially an automatic joint venture, isn't it?
No, not necessarily. You can have a company in China that is 100% foreign owned. You don't have to have a local partner, but a lot of people prefer to have local partners. But basically, say a company like Intel, they're 100% owned by Intel. They don't have local partners.
Where would the debt flow if China decides to unload a certain percentage of that massive amount of United States debt they currently hold? Where would it flow to?
Well, that depends on the conditions at that particular moment. But say, in theory, China could say, okay, instead of having this quantity of US government bonds, we buy Exxon or we buy Chevron. Politically not acceptable in the US that China would own Exxon Mobil or Chevron. But they could essentially shift from owning US government bonds into a portfolio of US shares, in theory, or into a portfolio of any shares around the world, or into, I don't know, buying real estate somewhere in the world, so they can all do that.
Okay.
We don't know for sure. So far, I've been to some extent surprised that the Chinese were slow to essentially accumulate gold, because we told them already 8 years ago that they should actually increase their gold holdings, which they didn't do. But I think slowly, especially if gold came down to a level below where the Indian Central Bank, the Reserve Bank of India, bought its gold, because the Chinese, they would perceive it slightly as a loss of face if they paid a higher price than the Indians. So, but if the price drops below around 1,050, I think the Chinese will come in.
Interesting. Our guest this week on the Money and Wealth Show, visiting Canada from Thailand, is Dr. Marc Faber, and we'll be right back.
Good afternoon. My name is Larry Ray. I'm the president and CEO of Gold Ray Resources Corp., a company that trades on the TSX Venture Exchange and has the majority of its operations in China. We are currently developing a resource there with limited production at this time. Our goal is to increase this production up to about 1,200 to 1,500 tons per day. And to do that, we are negotiating with several Chinese companies, one of which will become our partner either directly into the company or into the project, which will allow us to move the project up to the desired tonnage. For further information, please visit our website at goldray.com or phone 604-531-9639.